about the ledger briefly. So the ledger, it's where you apply double entry principle. So the double entry principle means that whenever there is a transaction, at least a minimum of two accounts must be recognized and must be recognized and recorded accordingly. Now, when you have a transaction, two accounts will be affected. Minimum of two. Could be more, could be three, could be four, but at least two accounts will be affected. And out of these accounts, one will be debited and the other one will be credited, right? So for every transaction, you need to have at least one account that will be debited and one account that will be credited, right? Now we are done with the ledger. Okay, before we wrap up ledger, some ledger accounts need to be closed off and the other ones need to be balanced. So I'll make an example. All the items in the balance sheet section of the trial balance are the accounts that are balanced, and the other ones in the nominal account sections are the accounts that are being closed off. Okay, now let me put it in simple terms. All the assets, all the liabilities, and the capital account drawings, share capital, whatever capital account, drawings, current account or retained earnings, they are balanced, right? So you have liability, you have all liability items, you have your assets items, all your assets items including negative assets. Then you have your equity. So the equity items are basically the capitals, the current accounts, and the drawings, depending on the type of ownership you're dealing with, on the type of business we're dealing with, right? Now, expenses and incomes are not balanced. They are closed off to the profit and loss accounts, and then you take them to the income statement. So the other ones are not closed off. They are balanced, and then you take them to the balance sheet. Now, we are done with the ledger. Let's go to the trial balance. So the trial balance, you just take everything in the general ledger and then you put it there, you record it there. And then all the items that are assets and liabilities and the equity, you put them under balance sheet section. Then you have the other ones, which are expenses and incomes, you put them under the nominal account section. Then you take all the items in the balance sheet from the trial balance to the balance sheet. Then all the items on the nominal account section from the trial balance to the income statement. Okay, I think I've covered almost everything that needed to be covered in this. Cheers.